Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, February 13th, 2018. This is a midday market update. It's just after 1:30 p.m. Eastern Time as I'm starting this video, and I just wanted to do a quick update on the broad markets, take a look at where we're at and where we might be headed. This is the daily chart of SPY, the S&P 500 tracking ETF. This is that primary uptrend line. If I jump back here and show you, it comes off the about the early 2016 lows right there. And you can see, like I mentioned before, we had a intra-week, or what I call a momentum fueled overshoot. There was a lot of downward velocity where we're near pretty much a waterfall sell off. And as I often say, it is more often than not when you have a very strong correction to the downside or a very sharp rally to the upside, you get what I call those momentum fueled overshoots. There's so much momentum and velocity going down towards this support level that even if that level holds, which I suspected it would, it is not unusual. In fact, it's more than common to see prices overshoot and then snap back and then get back on that level. So this is, you could say technically speaking, a break of support, but it's also a big flush out move. It shakes out a lot of longs, it sucks in some shorts, and so far, most importantly, now that the dust is settling, or has settled for about the last, almost last week or so, we're seeing prices normalize somewhat, stabilize, I should say, and most importantly, we're back on that trend line. Now, with that being said, we are still in a very precarious technical position because this is an important trend line. This is a 2+ year uptrend line. We're sitting right on it. Before I leave the daily charts and get to the weekly charts, I'll highlight one other thing that stands out here. If you followed me for a while, you know I like to use the PPO and sometimes the MACD too is a trend indicator. And what I use is not the PPO line, but the 9 EMA, which is a signal line. That's the white line because that's the last of the two to cross. And it's a pretty simple yet effective trend indicator. When the 9 EMA or signal line is above the zero line, which I just highlighted, the trend is bullish, and when below, it's bearish. Now, we've been the last 2 years, when I'm using this example here, doesn't do a great job because the trend has been an almost unprecedented uptrend with very little volatility, very few corrections. You can see the only two times that we breached below there were right here, and we had these were the two biggest corrections that we've had in the past 2 years, other than this one. Now, this time around, we were at such high levels that all this recent correction did, it basically brought us down to that level. Yes, we are slightly below it, but not by enough yet. Sometimes you get a brief whipsaw signal, so you don't want to go all in short every time it crosses. You look at a lot of other factors. Again, everything that I've mentioned on the 60-minute charts and everything else. So what I think this overshoot was just like the overshoot of the support line there, the uptrend line, and I think we'll come back in, and I think there's a little more upside here near term. But again, it's a precarious technical position because if we reverse and we close the week down well below this uptrend line, you're going to have that PPO close well below the zero line, and if there's more downside next week, then that could put us on an intermediate term sell signal. That's not my primary scenario. My primary scenario, as you guys know, is a little more upside. What else stands out on this chart? Let's see. Well, we can look at again, we're going back 2 years. And in the last 2 years, we've only been oversold. Oversold is defined by a level of 30 or lower on the RSI. One, two, three, 4 times. And let's see what would happen if you stepped in to buy on those 4 occasions. Here, that got you in a little bit early. You took a little bit of a drawdown, came oversold again, and that was the best buying opportunity in years right there. And now again oversold. So a lot of reasons in the chart to be long right now or not to be short at this point. The time to be short was up here again a few weeks back when I pointed out these trend line breaks and all the major indices. That was the time to short, and this was a time to get long. And as of now, you may not want to be fully committed to this market, whether you're bullish or bearish, long or short. But I think the near term, at least unless anything changes soon, I'm still looking for more upside. And I'll get to the very, very near term outlook here in a second in the 60-minute chart. So that's SPY. Real quick, QQQ, same story, same uptrend line, well defined, intra-week breach. Snapback trading above it now. As you can see, we reversed just above the 200-day exponential moving average. Trend indicators on QQQ, you can see remain bullish at this point in time. And again, you can see how these breaks below on that signal line showed you the three major, or not major, the three biggest corrections that were, or four, I should say, that we had in QQQ this year, but we're still above it. So there's a point. We're in a bull market. As much as I believe that we're in the ninth inning of that bull market, some people say the eighth. It doesn't matter. Everyone has their own opinion. I don't think we're going to make it throughout 2018 without seeing a drop of at least 20% off the highs, and quite possibly the beginning of a new bull market that takes us quite a bit lower. But let's take it one day at a time. You can't position for what may happen a week, well, maybe week, but not months from now. All we can do is look out near term and make sure we're on the right side of the trend. And right now, the primary trend is still bullish. And this may prove to be, again, one of the better buying ops for a while, especially if we go on to new highs from here. So, all right, weekly charts before we move down to the 60-minute charts. This is QQQ weekly. There's quite a few lines on here, but let's just focus on this white line. This was off the mid 2015 lows. We had a meltdown type mini crash back then, and there's a well-defined trend line. These two white lines together, this one and this one, form a price channel. These are parallel lines, and most importantly is this lower uptrend line, very well defined. You can see the only time it was broken was on an intra-week basis, and as I always say, the only thing that matters if you're trading off the weekly time frame, as far as using candlestick charts, it's that weekly candlestick close. If you were to short an intra-week break, you got burned. You got burned really bad back here. So you want to wait to see a weekly close. Same thing here. We broke down below their intra-week. But as I said before it even happened, I said all that matters is how we close a week, and you can see, boom, QQQ managed to perfectly snap right back up and close above. The body shows you, the red candle shows you this is where we close, the bottom of the body of that candle, not that shadow right there, the tail. That was the intra-week action, and now we're back above it. So from a technical perspective, they call that a stick save. We were saved by the end of the week, and we're still above trend. And did I show you SPY weekly? If I didn't, same story. Well-defined uptrend line off the 2016 lows in SPY. Intra-week breach closed right a hair below it, but close enough, as I said back at the time. And now we're trading above it. So far, so good for the SPY as well on the weekly time frame. Now let's move down to the 60-minute time frames. We had that scenario that I had laid out in advance, one potential scenario, and it played out. Like I said, typically when you have a sharp move down, especially out of nowhere after a strong uptrend, you have a big correction. It's not a one and done. Very unusual to see a V bottom, meaning a boom, boom. That's unusual. More often than not, and I've seen it many times over the years, and that's what we got. You have that sharp move down, you get a little kickback round, and you come back to test those lows. And as I said, it's once in a while, it may be an equal test of the lows. Sometimes you may fall a little bit shy of those lows, but most often it's an undercut of those lows before lasting reversal. And this is bullish. I like to see that for a couple reasons. Number one, when you see that second low, that you get a lot of the last of the weak-handed longs throw in the towel. They were freaked out here, and they were starting to get their hopes, and the fear started to subside when we had this kickback rally, and then you get that last thrust down, and that's where they throw in the towel. And that's actually a good thing for the market if you're going long SPY, because when I say weak-handed sellers, I'm talking those that are quick to sell. You have some people that'll hold on to something. I mean, you'd have to drop this market 50% or more for them to let go, and then sometimes they don't even let go. I'm talking to people that rattle quickly. And when you get those investors and traders out of the market, it puts a new supply dynamic, underneath. You have a more stable. You have a new round of buyers and sellers. You have people that went long here, like I did. We stepped in, and they're willing to hold off, and they can give it a little room because they're now profitable. Now you still have a lot of trap sellers up here that at some point, when we bounce enough, they're going to want to get out. This scared them, and if they didn't sell now, they realize the market is not bulletproof as they thought it was for the last year plus. So where we're going, and again, what happened most importantly, besides that undercut of and successful, I call that a successful test of the lows, even though we undercut it, we're back above that previous low right now. Um, but as I said, and this is a scenario I laid out, and I love to see this on the 60-minute time frame, is bullish divergence after a sharp move, just like I like to see divergent high after a sharp rally, just as we did here. So this is why I was bearish here. Gave you guys all, posted, major sell signals on the broad markets when these 60-minute trend lines broke right back here. They all broke in unison. That was our sell signal. And you had the divergence at the highs, negative divergence, and you have positive divergence here. So everything I like to see for these swing tradable trends. This is, again, the world, my favorite time frame for swing trading. But I always use these charts in alignment with the other charts, because if I saw a different story on the daily chart, let's say that we were, back testing a key support level that was broken that's now resistance, then I might not be so bullish. And I'm not super bullish. I'm still cautious because, like I said, we're not out of the woods yet. One bad day could put us back down there. In one bad week, if we close the end of this week down lower, it will flip some trend indicators to sell signals. It will then put us below trend on those weekly uptrend lines and everything else I just mentioned. But until and unless that happens, here's what I'm looking for. I'd like to see a little more upside on SPY to help firm up this near-term bullish case. This trend indicator I covered earlier on the daily time frame. Here's the PPO. Does a great job on the 60-minute time frame as well. And as you can see, throughout this entire run here, well, wrong tool. I'll try to grab an arrow tool. Throughout this entire run here, we were above that 9 EMA right here was above the zero line. It crossed below, it's bearish, and it's still below. So I'd like to see this cross back above, make a bullish crossover again. I'm not talking about the blue line, the PPO line. I'm referring to the 9 EMA, the second of the two to cross, and that will help firm that up. I also highlighted, when I put this as an official trade idea the other day, we have a resistance zone right here that runs from about this level to that level. We hit it already, pulled back. We need to punch on through that resistance zone. I think it'll happen. Maybe we come back down here, support zone around 262. We already had a little bit of a pullback. I can't tell you whether we're going to go there or we're going to punch up through there. But I can tell you I still have a pretty high degree of confidence. At the very least, my first target here at 271.50 gets hit. Probably a little reaction there. And at this point in time, I'll leave these additional targets on. T3, if we do get up there, we'll really need to pay attention to how the charts look, because when you have these big shot across the bows, I can show you here on a daily chart. Let's go back a couple years here. Let's look at a clean chart. Sometimes you have a shot across the bow, which I refer to this recent correction as, and then you go on like you did here, you make a new high, and then the big sell-off comes. Sometimes you have a shot across the bow and you never make a new high. Here was a correction, doesn't look like much. We had a little kickback rally, and that one fell shy, and then there was a bigger pullback. That might not look like much because so much time has passed. We really have to go back here. Let's do this. There we go. And now you can see it a little better what I'm referring to. So sometimes that kickback rally falls shy, then you get the next leg down, and sometimes the kickback rally takes out that previous high. You guys know one of the, an optimal scenario I'd like to see would be a move up to new highs to put in a divergent high on the daily chart. I've talked about that recently quite a bit. See us come back in here. Oops, I drew that wrong. Uh, see something like this. Uh, Markets come up, make a new high. The indicators do not. They make new lows. So it would look like this. Kick back, take out the previous highs. Bullishness would go through the roof. Everybody would be talking about how that was the best buying opportunity in years. And then boom, the big move down comes. So I'll be looking for that. It's one of several possible scenarios. But, I'm not going to bank on it unless the charts tell me to stay long at that point up into there. Otherwise, I'll be looking to put on probably to add back short interest, maybe as we approach those highs. Again, I'm getting a little too far ahead of myself because on the daily charts, there's just not a lot here to see. What I need to see happen on the daily charts right now, I want to see this PPO signal line, the 9 EMA. I want to see that turn back up and get back above the zero level. I want to see those trend lines hold that I just talked about here, everything else, and then we'll go from there. So right now, I'm more focused back once again in the world here of the 60-minute charts, and I think I covered everything that I'm looking for. You guys see my targets. Here's QQQ. If you're a QQQ trader or trading the Qs on this one, um, I'm a little more partial to SPY right now for a few reasons, but the Q is a higher beta index. What that means is it tends to go up and down more than the S&P 500. So if we continue to bounce, you may get some more bounce, but I think the semis have broken. I think tech is broken. That's led the market, and I think we're going to start to see a shift towards more defensive type stocks, things that the S&P 500 holds, utilities, REITs, consumer defensive stocks, things like that. And that's not what the QQQ is about. QQQ is about technology, biotechs, and all that stuff. So, that's where I think it's a little bit safer play to be right now on the long side would be SPY versus QQQ. But you can see some potential targets there on the Qs if that's what you're. Let's just wrap it up here. Again, I don't want to overcomplicate this. I'll go into some of the trade ideas in another video, but this is what I'm watching now. Let's take out that resistance zone. It's defined by a lot of these reactions. We had this period of consolidation back here. When we get up to this first target, we'll take a look at how things look. If it happens soon, that would be nice because that should flip this trend indicator back to bullish here and open the door up for some more upside here. So again, I favor something along these lines. A move up there, whether we have another kickback before we get there or not, and then probably another reaction. And at this point, I don't know. Depending on what I see, I may close this trade early. But I told you guys, you trade according to what you think the market's going to do. And if you got in here anywhere around here, you're profitable on this trade right now. And by all means, if you think the market's going much higher, then you can either set a stop. For a minimal loss, you can set a stop at break even wherever you got in, or you can trail your stops up. And let it ride because there may be a lot more upside before the top or the next big correction is in. All right, this has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.